It's Monday Mayhem on Dalal Street. Indian equities suffered their biggest fall in 2 months thanks to better than expected US jobs data that triggered fears that a Fed rate hike is right around the corner. The BSE Sensex crashed by over 600 points in trade today, while the Nifty ended the day below the crucial 8,800 mark on an all-round selling. Banks and technology companies were the worst hit in today's session, with the Bank Nifty plunging by more than 3%. The rupee also suffered big blows, plunging to a 2-month low of 62.73 to the dollar.
Market players believe the going could only get tougher if the US recovery gains momentum. Any possible hike in interest rates by the US central bank could lead to huge dollar outflows from emerging markets, including India. Remember, FIIs have pumped in around $11 billion into Indian markets since the beginning of the year, and any reversal of the trend could be bad news for both equity and debt markets. For now, the focus will be on corporate earnings, which will kick in from next month. The Monday Mayhem on Dalal Street is our top story on Business Tonight.
The markets are keeping a hawk's eye on when she hikes interest rates. And with the US underemployment rate hitting a 6.5-year low on Friday, Indian stocks went into a tailspin, fearing that Janet Yellen will press the trigger earlier than expected. The argument? If interest rates rise in the US, big money will flow into US bonds, choking up liquidity in emerging markets like India. No wonder the Sensex crashed by over 600 points, its biggest single-day fall in 2 months.
The last few days have seen the global markets also consolidating because of some concerns of a tightening bias in the US. Funnily, good news in the US is perceived to be not so great for the markets because of the tightening concerns.
Banking stocks took it on the chin, and the Bankex emerged as the top loser, slipping by 3%, as bad loan worries dragged down the sentiment. ICICI Bank and Axis Bank were amongst the biggest losers on Dalal Street. Investors were convinced that global cues will continue to weigh heavy.
In the kind of a run-up to the rate hike happening, market is going to be sideways. But we've seen historically, markets do sell off on the first rate hikes. But if the rate hike is correct in the assessment, that is, economic recovery is underway, market look beyond the rate hike and then they focus on the revenue momentum.
Quarterly corporate earnings will start trickling in by mid-April, and the numbers will have a big role on how the markets shape up going forward. No doubt, a pro-growth budget, the surprise interest rate cut by the central bank, and the government's relentless drive for economic reforms has lifted the market sentiment. But all this may come to a naught if the US recovery gathers momentum, triggering a dollar outflow. Ashwin Mohan, ET Now, Mumbai.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.